Been a heck of a week. You still sticking with 5,300 for the end of the year? Are you wavering on that, given what lies ahead in this new Fed regime?
No, we're not. I'll throw a number at you. 231. There's 231 trading days left. We're 19 days into 2022. You know, you quoted Tom Lee's great note today. Stocks go down like an elevator and up like an escalator usually. Well, we've seen this the last couple of years that stocks can go up when they correct like an elevator as well. And so Karen was talking about how important Monday's low is. And if you're an old timer, it's absolutely true. Now, there's some old timers that I've been talking to going back 30 years in my career.
You calling me an old timer?
No, I'm not. I'm actually an old timer, and because I can't tell you,
right.
I can't tell you how many people have come out of the woodwork to talk about the third wave coming down, 4,100, all this kind of stuff. But equally, though, that I'm getting bashed on social media and getting notes in my Bloomberg and my personal email telling me that I'm crazy. But then I also get these amazing emails from people that I've known for 30 years saying, give me a shopping list of what to buy. And these are the brokers that are buying things for their high net worth people. So I think the key thing that has not been talked about a little bit today, but should be even more, is that the market has been discriminating. And when the market becomes indiscriminate, that's when you have to worry, and that's when the best buying opportunities come in. So to date, the market, for the most part, Scott, has been discriminate. It took care of what it needed to take care of in terms of the high multiple stocks. But on into Friday and then into Monday, the beginning of Monday, it was obviously more indiscriminate, and that's what made that low, and that's what created the opportunity. So I think holding that low on a near-term basis is exceedingly important.
Yeah, I'm thinking, you know, and all the things you said and where your target is, you are assuming, you have to be, that Jay Powell is going to be able to land the plane, even if he doesn't have the most detailed map, right? And he doesn't have somebody guiding him the whole way, right? Guidance is gone, and they're going to have to sort of wing it based on what the scenario is. That's not always the easiest place to be able to land something. You seem to be giving him wholeheartedly the benefit of the doubt to be able to do so.
I am. He's done a wonderful job. And, you know, in life, sometimes we have to be humbled. We make mistakes. And I think he probably was a little bit too aggressive in 2018, and he learned from that. I think he's going to do a very good job threading the needle. And if you actually listen to the press conference and hear how he maneuvered through the questions, how many times did we hear reporters say, is there going to be a 50 basis point cut or a 50 basis point raise? Everyone is convinced now that we're going to see a 50 basis point. I don't see it. And I think it's going to be somewhere in between. I don't think it's going to be 5. I think our great economics department is saying 4. I think actually the trend that we've been talking about for several months now is that the second half of the year, we could see a supply glut as inflation is already slowing, but we're not really recognizing it because we're so caught up in today's data. Even today's data was showing that on a month-over-month basis, things are slowing, and that's really positive.
Yeah. I got to cut it a little bit short with you today, B, but we'll have you back soon. I appreciate it. I got to go to a break. You have a good weekend. Brian Belski, BMO, joining us once again.